My, how fast and how many things have changed over the last 3 and 6 months. Here are some numbers that have gone up over that time and why they are important to you. 19%, 99%, and 297%. Welcome to Let's Get Frank About Real Estate. I am Frank McManus with Lamontia Realty, and today we're going to look at what the month of June, what the second quarter, and what the first half of the year real estate market looked like for the Middlesex County. Now, first off, the signs of a changing market are definitely evident at this point, with more available properties on the market, more properties sitting on the market longer, lower overall attendance at open houses, and less total numbers of offers being received on homes. So sellers, take note and plan accordingly, because although you may think, since your neighbor might have sold for $150,000 over asking, you should expect the same. You could be sadly mistaken with this approach. As you can see, inventory is up 19% within the month of June alone, now having over 1,800 properties for buyers to choose from. That's an increase of 298 properties in 30 days. If we compare it to 3 months ago, when there was only 909 properties available, inventory is up 100%, or 901 properties. And if we take even a further look back at the beginning of the year, we see inventory is up 297%. That's 1,200 more available properties for buyers to choose from since January 1st. So the message to you sellers is this: you're no longer a big fish in a small pond, okay? If you still want to maximize the value of your home, if you still want to increase the interest from buyers, if you still want to attract multiple offers and sell for over asking, you need to listen to your realtor and price your home competitively so you can avoid sitting on the market and having the dreaded price adjustment conversation. But all that being said, I don't want to have you buyers be fooled either. The market is still a strong one overall. So let's turn to the sold numbers. There were over 2,000 properties sold throughout Middlesex County in the month of June, with an average sale price of over $939,000. That's 108% sale price to ask price ratio. Zooming out even farther and looking at the second quarter, we see that there were over 5,000 properties sold with an average sale price of $919,000. 2% less than the month of June, but still a strong 108% of the asking price. And if we zoom out farthest and look at the whole first half of the year, there were over 7,900 homes sold with an average sale price of $886,000, which is 3% lower than Q2, 6% lower than June, but still a very respectable 106% of the asking price. Now you may be wondering, why are the sale prices higher for the month of June than they were earlier in the year? Well, first off, June sale prices are a reflection of homes that were put on the market and negotiated in the spring or earlier in the spring when inventory was still very low, but buyer demand was still very high. Even though the interest rates went from the twos to basically the fours, as you can see at the end of March. And secondly, the homes that sold in the first quarter of the year were put on the market and negotiated in the winter months, when both buyer demand and inventory and overall sales are always low, simply due to the time of the year. Now, 2 last points of interest that I definitely want to touch on here: absorption rate and interest rates. Okay, absorption rate is the speed in which the amount of available properties would run out if nothing else came on the market. Now, over the last year, we've had over 19,000 total properties sold over the last 12 months in Middlesex County. That's an average of 1,595 sales per month. As we said earlier, right now we have just over 1,800 properties available to choose from. So this means that if nothing else at all came on the market, we have slightly over 1 month of available inventory for buyers to choose from. So although it is getting better for buyers, it's still a competitive market. Then there are the rising interest rates, okay? As you know, interest rates have basically more than doubled since the beginning of the year, when they were, again, basically in the twos. mid to high 2s. And this has greatly impacted buyers who may have once been looking in the 700,000 or 800,000 for a new home, but now have been forced to go down basically a whole price bracket and are now looking in the 6 or the 700. So this means going forward, you sellers and you buyers need to do the following. Sellers, expect to continue to see more properties coming on the market, which means more competition for you. It also means potentially less buyer competition for your home. Therefore, you need to be very competitive with your pricing and have a very realistic expectation regarding the number of offers you receive, what buyers are now offering for homes, and the fact that buyers are going to start asking for inspections once again, okay? Now, changing over to you buyers, you need to regroup. You need to regroup with your lender and your realtor to discuss what you can afford today versus what you could afford 2 months ago, where you should be looking based on your affordability, what properties you have to choose from in those areas, and a game plan to successfully secure a new home. And remember this, the interest rates that you are seeing today and what you'll see over the rest of the year are typically historical average interest rates. What we have seen over the last 2 years has been artificially produced anomaly as a result of a historic event. So don't be scared by the rates you're seeing. It is completely normal. Now, if you have any questions about anything that we've discussed or anything that I've shared, or thinking about anything otherwise, simply DM me or email me at fmcmanus@lamakiarealty.com. And for more videos like this with tips or information on the market, as well as on buying or selling, please follow and subscribe to any one of my social media pages. Until next time.